Hello, and welcome to this video on the elements of PepsiCo's 2019 Annual Report and Form 10-K. U.S. companies that are publicly traded must provide shareholders with an annual report and file Form 10-K with the U.S. Securities and Exchange Commission. The annual report and Form 10-K will always include financial statements, which are the highlight and the summary part. The most important pages usually, as far as if you had to pick 4 or 5 of them to look at. Management discussion and analysis preceding the financial statements that tries to explain why the financial statements look the way they do in English and give more details. The notes to the financial statement, which explain the method used to the accounting method used in producing the financial statements, and more details on each line item in the financial statements, and the auditor's report, meaning an accounting firm that is independent from the company has looked over these financial statements and the systems and the integrity of the management control over the system, or the integrity of the internal control over the systems used to produce these statements, and they find that these represent what they are supposed to represent according to U.S. generally accepted accounting principles. So it's not just management's words that you have to take that these are the financial statements. You have an independent opinion. Let's review these elements using PepsiCo's 2019 Annual Report and Form 10-K, which they have together. So annual reports contain a bit more pictures and things. They contain the financial statements. Usually they just contain a little bit more pictures. So you'll notice that the financial statements and reports are more simplified in your text for teaching purposes. Annual reports of real companies look slightly different and they will be more complex, but they have the same general elements in similar formats. Might use slightly different wording. My goal for you is to be able to read financial statements to understand companies you may work for, want to work for, invest in, or want to invest in. It's a bit of an art and it becomes easier with practice. We'll look at PepsiCo's 2019 Annual Report to get you more comfortable with the process. So annual reports tend to have plenty of appealing pictures of the company's products and services, information about the company's charitable and socially responsible action, and a letter from the CEO. I always say read this with a grain of salt, as you would somebody's cover letter, as it tends to emphasize the positive. The Form 10-K, which includes the financial statement and the management discussion and analysis, the notes, and the auditor's report, doesn't really have all the pictures, but basically contains the important details. Companies that are publicly traded that issue securities in the United States file all financial information from the annual report and more on Form 10-K. So it's more information, less pictures. PepsiCo is a publicly held company because its stock and bond securities are traded on the NASDAQ stock market. Other companies might list their securities on the New York Stock Exchange. The SEC makes Form 10-K and other required filings from these companies available on its website, which you can download, some of which are even downloadable so that you could use them in an Excel file to get the numbers. For management discussion and analysis, you'll notice there's quite a bit of pages. They precede the audited financial statements and give them context. There's 32 whole pages of this. First, it describes their business in 5 pages, including their business risk. Second, yearly overall financial results. So overall, for each division, see Frito-Lay North America, Quaker Foods North America, Pepsi Beverage North America, other international divisions, other consolidated results, items affecting comparability, liquidity, capital resources. And you'll see that the critical accounting policies, the accounting policies that they choose and follow that they think makes a big difference on the financial statements, they try to explain these to you in further detail. The financial statements, the notes, and the auditor's report take up the bulk of the 10-K. The financial statements are only 5 pages, but are its main focus. If you could pick any 5, you take this. To understand them better, you need the footnotes. The notes provide even more detail on the financial statement numbers and accounting method used. There are 45 pages here. So there's a note how they present their divisions, their accounting policies, restructuring charges, and impairments. property, plant, and equipment. They give you the details here. And the auditor's report is only 3.5 pages long. So what you'll see on the financial statements, you'll see that for financial statements, I say they follow a certain format, which I call an equation. The first financial statement is the income statement, tells you the operating success of the company during the year. And the format should be revenues minus expenses equals net income. They begin with revenues, sometimes called sales. Cost of goods sold is called cost of sales for PepsiCo. They use an analogous term. Companies that sell service might also have the cost of that service, so that's why they just say cost of sales. We have other operating expenses, including selling, general, and administrative expenses and others in day-to-day operations. When we look at the difference between sales minus cost of sales, we get gross profit. Gross profit minus these operating expenses give us operating profit. Later on, we'll have some interest expense and revenue. That's a non-operating expense for PepsiCo because it's not part of its main business. And provision for income taxes is what your text refers to as income tax expense, and it's close to the bottom of the statement. Net income is the bottom of the financial statement. Remember, revenues minus expenses is net income. You'll see there's a couple of net income numbers, but we want to see the net income number that's attributable to PepsiCo common stockholders. So despite having $67 billion in revenue, after deducting all the expenses, there's $7.3 billion available for PepsiCo's common shareholders. So if you owned a share of stock in PepsiCo. Your book calls the second financial statement the statement of retained earnings. Most companies have something that's a little more detailed called the statement of shareholders' equity. So it contains the information it's in the statement of retained earnings plus some more. So if you want to see the statement of retained earnings, you would look at the retained earnings section of the consolidated statement of equity. So it has beginning retained earnings for PepsiCo that was $59.9 billion, added this year's net income of $7.3 billion, subtracts dividends declared for shareholders of $5.3 billion, and that's how you get the ending retained earnings, the ending amount of earnings reinvested in the business and not paid out as dividends, which ties to the third financial statement, the balance sheet, which we will soon discuss. So the net income from the income statement goes into retained earnings. Retained earnings from the statement of retained earnings or the statement of equity ties into the third financial statement, the balance sheet. The balance sheet is a snapshot which shows the resources or assets that a firm owns at a point in time and how it finances it. Firms finance their assets or resources by owing other people money, having money payable to creditors, or by money invested by owners or equity. So sometimes it might be called a statement of financial position or a similar name. You will know it's a balance sheet if it has the accounting equation. Total assets, which are $78.55 billion for PepsiCo at the end of 2019, equals total liabilities, $63.68 billion in 2019, plus total equity, $14.8 billion. You will also notice that this cash and cash equivalents that you'll see on the balance sheet, you'll also see this in the statement of cash flows. This cash and cash equivalents of $5.509 billion plus some restricted cash of $61 million gives us the ending cash balance on the statement of cash flows. So you'll also notice that the $61.9 billion in retained earnings agrees with the balance at the statement of equity. So what we looked at in the prior financial statement, retained earnings, earnings kept in the business, reinvested, is the same as in the statement of retained earnings or the retained earnings section of the statement of equity at the end of 2019. Okay, the statement of cash flows. Cash changed during the year. If you looked at cash at the end of 2019 and the end of 2018, you will see that it's changed. It's gone down. It's less in 2019 than it was in 2018. Well, to explain the change in cash and cash and restricted cash, we have this statement of cash flows. Investors consider the first section that explains cash flow from operating activities the most important. This is cash inflows from day-to-day activities, including cash received from customers, cash paid to suppliers, to employees, and to lenders for interest. The cash flow from operations, I abbreviate that CFO, format that PepsiCo uses and most company uses starts with the net income and the 7.3 billion. And what happens is it adds back non-cash expenses and changes in short-term assets that don't affect cash. So the reason why the cash flow from operating activities for PepsiCo is 9.6 billion and it's greater than net income, that's only 7.3 billion, is because not all expenses are paid in cash this period. Cash flows from investing activities are cash inflows if you sell long-term assets and property, plant, and equipment, and outflows are in parentheses, meaning they're negative and they're cash used to buy property, plant, and equipment or investments. PepsiCo, like a lot of companies, will have negative cash flows from investing activities because they bought more new property, plant, and equipment in investments than they sold old equipment. So the negative cash flow of investing activities of 6.4 billion is mostly because they bought a lot of property, plant, and equipment, and they acquired the business called SodaStream. They made that investment. Cash flows from financing activities, cash flows to or from. So from owners for stock issued or repurchased. Cash flows to owners is an outflow for dividends. Cash flows from lenders, that's a positive if you issue new loans. Negative outflows if you repay those loans. Financing activities use cash of 8.5 billion, mostly because we paid dividends to shareholders and we repurchased our own common stock. So altogether, I said this ending cash, cash equivalents, and restricted cash is 5.6 billion. And the reason why it is that is cash decreased from what it was in 2018 by 5.2 billion. Why? Because cash flows from operating activities were positive, but not big enough to cover the cash outflows for investing in property, plant, and equipment and financing activities, paying dividends, buying back stock. And this, for financial statements, I've given you a handout for this in Moodle. Remember, they articulate. So the income statement, profits or losses from running the business during a time period. Revenues from selling products or services. Remember, they're not only cash revenues, but revenues from credit sales that you expect to collect, minus expenses or costs incurred, whether or not you paid for them in cash this period, equals net income. Net income from the income statement, you'll see it again in the statement of retained earnings. So once we have net income, we look at the beginning balance of retained earnings. That's earnings that have not been paid out as dividends or given back to the owners. Beginning balance retained earnings, it's zero when you start a business. Most companies have a positive balance if they've earned money over time that they haven't paid out as dividends, although a few will have negative if they have accumulated losses over time. We add this period's net income. Notice if net income is negative, that will reduce retained earnings. Subtract dividends that are declared to owners, generally paid out of current and prior profits, and then we get the ending balance of retained earnings, earnings reinvested in the business, which is part of shareholders' equity in the balance sheet. So the ending balance of retained earnings will be part of equity on the balance sheet, which is the firm's resources or assets, and the assets either are financed one of two ways. So assets equals liabilities. They're financed by amounts owed to creditors, whether they're employees, trade suppliers, or lenders. And what's left over is financed by the owners, either when you issue stock or retain earnings. Now notice that we'll have an asset called cash, and this cash will be at the end of the statement of cash flows, at the very bottom of the statement of cash flows, after you look at the change in cash. So we know that if we have two balance sheets next to each other, 2018 and 2019, you can say cash has changed. You can subtract them. That gives you a piece of information, but not why. Statement of cash flows tells you why it changed. Cash flows from operating activities, which for PepsiCo was positive. Add cash flows from investing activities. For PepsiCo, this was negative because they bought more, they used cash to acquire property, plant, and equipment more than they sold any. And add cash flows from financing activities. This was also negative because they gave money more back to shareholders than issued new stock or borrowed new principal of loans. And that'll equal the change in cash. The change in cash tells you why the amount is different from the end of last period to the end of this period. So if you take the change in cash from the statement of cash flows, change in cash, cash equivalent, and restricted cash, added to the amount at the end of last period, it gives us the amount at the end of this period. So it'll give us the ending amount on the balance sheet. The change in cash plus cash, cash equivalents, and restricted cash last period equals the ending balance of cash, cash equivalents, and restricted cash this period. Notes must follow the financial statements. PepsiCo's Note 1 says the basis of presentation, including they consolidate or add together the financial statements of subsidiaries they control using U.S. generally accepted accounting principles, and they tell you about how they report for divisions as well as the whole company. There has to be, for every company, a note describing significant accounting policies used for different transactions and financial statement items. PepsiCo uses Note 2 for this, and often companies have the option to choose one of several accepted methods. You'll notice there's details on financial statement items in several notes. Note 15, among other details, gives you information about PepsiCo's $3.38 billion of inventory. They break it into three parts. One part is raw materials. Another is work in process. Raw materials are not ready to sell. They're used in manufacturing. Work in process, and then that's finished goods that are sellable to customers. The independent auditors report. Certified public accountants, CPAs, perform external audits to give an independent external opinion on the company's financial statements. An unqualified audit opinion is the best outcome, and using the requirements of Sarbanes-Oxley, that both the CEO and the chief financial officer must certify management's responsibility for the financial statements in a separate report. So there's one by the auditors, and there's also certification by the chief executive and chief financial officers. So one is an opinion on the fairness of the presentation of financial position and results of operations in conformance with the generally accepted accounting principles here in the US for PepsiCo. A second is on the effectiveness of internal control over financial reporting. And this type of opinion was required after the Sarbanes-Oxley Act was passed. And they also give you more information about internal controls. So I hope you like learning more about the financial statements. Please feel free to use this presentation as a review before looking at other companies' financial reports. And I will also put the PowerPoints in Moodle. And good luck. Get started, Jaspers.